Okay, welcome back, folks. Welcome to FX Beethoven. My name is JD. Today, I'm going to talk about these pairs you see here on your screen, which is EURUSD, GBPUSD, NZD, CAD, and the EURJPY. I will try to create a series of these videos about these pairs. So, I try to create short videos about each pair, or maybe I can combine two pairs, right? So make sure once you finish this video, make sure you check another one, because they are all going to come together. So I hope this is going to help you guys. So let's talk about EURUSD and what you are going to expect in EURUSD and GBPUSD. Mostly looking back in the past week to see the behavior. This is going to help you understand the flow and what to look for when you are trading. So welcome back. So talking about EURUSD, as I told you from the beginning, every time you're going to trade, make sure you try to understand your higher time frame structure. It's simple. If you watched our previous video, you understand that we have our current range here, which we are trading from this high all the way to this low, and we have what? We have a break of structure somewhere here. So we have a break of structure here, and this is our current range we are playing in. And then we have to do what? We have to identify areas of liquidities, areas of imbalance. So make sure you mark all of these zones as I talked about before, because this is going to help you. This is what the market is looking for. So our focus is to see how our previous week was behaving. But if you look at the monthly time frame, you know where we are heading. Market's trying to fill this zone. We still have what? We still have imbalance resting here. On a monthly time frame, you can easily see that you have what? You can easily see that you have imbalance here. Market is trying to trade within that imbalance. Since you have that idea that market is pushing higher, our focus is how every candle is going to behave, because we are going to trade on M15, M5. So we have to know, we have to try to understand how every candlestick is going to behave. This is a monthly candle, so the chart is still running. So on the daily time frame, if you remember the other flow we did on our previous video, you remember I showed that we have, I showed you that we have a bullish range from the low to the high. This was a bullish range. Then the market was creating a pullback. Market was creating a pullback right here. As you can see, this was a whole pullback trading on our rejection block we have here. This is our rejection block. So this is the zone. Then we know market is going to push higher, creating highs and lows, highs and lows, highs and lows, right? So this is the area we are interested in. We know the target is to take this high. This is the target. The first smart money objective is complete. Remember, watch the video that talks about smart money objective, if you understand what I mean. So the objective of smart money was take this liquidity sitting here as your buy stops, as you can see here. Now, taking the high doesn't mean you are going to have a pullback. Market can easily maintain a trend forever. Yes, if I say forever, it can go as far as it can, maybe until we see a pullback forming. So what we're gonna do, you as a trader, you are focused on what? You are focused on this type of structure market is using to create a trend. To create what? To create a trend. Then you have a break of structure here, as we talked about. You have a break of structure here. Then the market create a pullback using what? Internal structure continuation. This is what we call internal structure continuation. Market did not create a deep pullback all the way down here. It used this internal structure to maintain a trend. So here you have another breakout structure in this level. Then the market is doing what? Market is creating a pullback within this range, our range. So as of now, this is our trading range for this bullish movement. This is your trading range. This is your trading range. This is your trading range from the low all the way to the high. This is your trading range. Then within this range, what market is going to look for? What do you expect market is going to look for within this range? First of all, immediately what? Immediately mark your price inefficiency, your imbalance. Right here. You have imbalance resting here. Then the market is dropping down to look for this imbalance. Then try to see what happens when the market is done feeling this imbalance. Market is doing what? Market is creating a pullback. Market is trying to push higher, if I can say. However, pushing higher is not a guarantee that market is going to take the high. Market can easily create a short-time pullback or a short-time high, and it comes down, take this short-time low, trading on this rejection block. Remember the concept of rejection block. Trading on this rejection block, and then we see a strong move to the upside, right? So how do we know market is going to come back here? Market will tell us using other structures we have within here. That's why we keep playing with different time frames to understand the flow of the market. Then going back to H4 time frame, we can easily, after completing this, after completing this mission of filling this imbalance, of course, you can easily see how market was trying to push higher. But from the top all the way to the bottom, we have a clear drop. So here, immediately you have to mark what? You have to mark your H4 imbalances you have here. The first one is here. This is your H4 imbalance resting here all the way here to this high. And then you have what? We have another imbalance resting here from the high, from the low of this candle to the high of this candle. You have to mark all of these zones. Now, after that, you go down again here from this drop. For example, if market is dropping, you have to mark your imbalance resting here, making this what? Making this low. This low can be a future liquidity, right? Can be a future liquidity. Can even be a primary liquidity of this range, if you understand that. Now, we have another imbalance resting here. You have to mark your chart this way. Now, since you have all of these zones marked, all you have to do is to keep playing with every weekly candle to see behavior. For example, this was the beginning of the weekly candle here. If I go back to our weekly time frame, if you go to our weekly time frame and we place a vertical line here, then you go back to H4 time frame, you see this is the open, the weekly open. The weekly open is somewhere around, yes, this is Sunday trading, Friday, and the Sunday open somewhere here. So if you go to 1 hour, we use 1 hour to show you clearly. So this was the open. This is the open of the week. So once you have the open of the week, you can simply wait. You do not have to do what? You do not have to immediately trade here. You can simply wait until you see a clear structure of what market is trying to achieve. So what happened after this week? You see the candle? because I'm going to remove this line, this vertical line. Try to see this candlestick you see here. I'm going to delete this vertical line, and then you have what? And then you have the open price here. This is the open, the weekly open. So after this weekly open, market goes higher to do what? Market goes here to grab liquidity, right? Previous day high. Here, this historical high, short time high you have here, was taken by this candle. This is the buy stop. Market takes this high. After taking this high, you see first of all after this open, market way down take the low. Then it comes back take the high. Manipulation on both sides. And then the market start dropping. Then once the market start dropping here, market created what? Created our bearish range. Now we have an idea of how a wick is likely to behave. Then we have what? We have a bearish range. And if there is one rule you have to remember when you are trading, every range deserves a pullback. Save that in your mind. Every range deserves a pullback. Hope you understand. To grab internal liquidities. Right? So after creating this range, market dropped creating this range using what? Using this literature structure. We have a low, a high. Market creates a low. Market goes how to create a high, a relative high to this area right here. So this is internal low, internal high, down range structure forming. This is still kind of range structure. Then after creating this high, market tries to go down to do what? To create a low. Then fails to do so. Market did not create a low here. This is how we started the analysis. Market did not create a low. So how do we know market is failing to create a low? When the market is doing what? When the market is breaking this structure. Instead of going down to create a low, market created a pullback, breaking this structure. Where does it tell us? Immediately, this is no longer a high. This area is no longer a high. This is what we call a failed high. A failed high. This is your failed high. Sorry. This is your failed high. So if you have a failed high, immediately this failed high becomes the target, becomes the liquidity. So immediately after failing to create a low, so this failed high becomes the liquidity. Then you are thinking how market is going to come back to our sponsored candle sitting here of our range. Market is creating a pullback within our range. Remember, every time you get a break or structure, you've got a range. Everything else you see is a pullback. We've been trading a pullback of this range. We've been trading a pullback of this range. Now, after breaking this high, so we have what? We have a clear trading range on Wednesday. We didn't trade on Monday. We didn't trade on Wednesday. We've got a good trade on what? On Wednesday and Friday. Wednesday, Thursday, Friday. We've been trading there because we have got now a clear structure we are going to use to do what? To trade. And then we have an idea of the direction of the market of the week. We know this movement is trying to come back here. It is trying to come back here to trade within this area. Basically, this is imbalance. I have to use a different color. So this is a zone where market is going to trade within, right? So here we've got our structure. Market is going to use to grab this fairly high, because this fairly high becomes a liquidity to target. Now, after getting our break, every break deserves a pullback. do not forget that every break or structure deserves what? Deserves a pullback. So this is a break. Market is breaking here, right? So we need a pullback. So after this break, we have got a bullish range. This time, we are happy because we have got what? We have got a bullish range from this low to this high. So everything we see here is a pullback to the downside. So after getting our bullish range, what is the next task? The next task is to do what? Is to mark our inefficiency. Right here. We want to see market coming to fill this inefficiency, trading on our bullish order block, resting here. Our bullish order block resting here. This is what we want. We want the market to trade on this level in order for us to buy the move. Right? So if we go to M15 time frame, it will be very, very clear for you. So on her time frame, we have got a break or structure on the hourly time frame. So after that, after breaking this high, we want to detect how market is going to trade back in this area. Now, how do we do that? First of all, we want to confirm a retracement break. This uptrend must be broken in order for market to come back here. This uptrend we have here from the low to the high must be broken in order to confirm we are going to have a pullback down here. So basically, to understand what I mean, I'm going to use a simple drawing that will help you understand this. So we have a structure. You've got market breaking this high right here. This is a break. So what I'm showing you here, I'm showing you this area. This is the zone. This zone is broken here. Then, in order, we know after this break, we need what? We need a pullback somewhere here. Because every break deserves what? A pullback. Every range deserves a pullback, right? But how do we confirm that the market is going to drop here? We will confirm that once this structure market is using is broken. This structure is broken. This uptrend is broken, right? So if you have a break here, we start confirming that market is going to drop here. But before it drops, market is likely to create another pullback or even in this retracement range. Think it in terms of highs and lows. So we have a high, this time we have a low. So we need to wait a lower high. A lower high, lower low, lower high, lower low, lower high, lower low. So you understand what I mean? So after this break, we've got a bearish range. So this time, when the market starts trading higher, we can do what? We can sell the move, a counter trend movement, going all the way down here. And once the market is here, we can take a pro-trend movement going higher to target this range. Hope you understand what I mean? So the problem, or sometimes the problem you're going to face is you have no idea that even if you broke this structure, market is not going to move like a straight line. Market can do something like this, and then it ends up coming here, and then it drops. You have to focus on your range first, everything else, and ignore everything else. Focus on a range first. And this is going to give you an idea of how a daily cycle is going to behave, or a session cycle is likely to behave too. Right? So, back to this point, back to this area of Euro USD, you understand that after this break, in order to confirm that the market is going to drop down, we need to break a structure we have here. So which structure? If you look closely here, I will have to zoom in here so that you can see it correctly, we need to do what? We need to see a break of this low as our structure. This low is broken to confirm what? To confirm market is ready to do what? Market is ready to come back all the way down. Right here. So after this break, you want to wait market to come back to your primary zone. Right here. Your primary zone. Then you can be a seller on this area because you have an idea that the market is going to target imbalance we have here, trading on this bullish order block. You see how to get the flow of the market? Does it ring a bell? If you watched previous videos about order flow, so you have an idea of what EURUSD is looking for, right? Then, once the market is here, the problem you're going to ask, how do you enter here? There's another secret here. Maybe we'll talk about it maybe in the future. So, once market is dropping here, you are going to see, you are going to be a buyer on this area, on lower time frame. On lower time frame. You are going to buy here, targeting what? Targeting the next external liquidity you have here. This is high. It's going to be your target when you are buying. When you are buying, this is going to be a target, right? After this target, what do we expect? We expect what? We are going to expect a pullback again within this range, because after breaking this high, we have formed what? A new high. We have formed a new high. This is our range. From the low all the way to the high, this is our range. So in order for market to come back here, we need to see a pullback. We need to see a break. So by studying this structure, this push to the outside, we have what? We have this retractor structure resting here. So after this break, my eyes are here. I'm going to wait to see market trading on this area in order to do what? To take a pro-trend setup. But as you can see, market will not always give you that opportunity. You see, it created a shallow pullback and then start dropping all the way down. If this happens, don't worry. Don't worry. If market is not here for you to sell, wait for here to buy. Do not try to take anything here like buying here because you think it's going to go higher, because you can easily be taken. Don't try to buy this type of move because you see a retractor break and you think you are going to go higher. You are opening your risk. Always try to sell from primary zone, for example. Primary zone down here. Then the market is going to do what? Market is going to trade. Market is going to fear. You see we have imbalance here, resting here. This was imbalance. Then market was trying to remove imbalance. Then our imbalance remains here. Because here we have removed some part of the imbalance. Then you have imbalance left. The imbalance left is here. Market needs to come back to fear this imbalance. Then you have what? You have your bullish order block resting here. Your sponsored candle. Then the market is to trade on this area. This is where you're going to be what? To be a buyer. This is where you're going to find what? To find opportunity to do what? To buy. After trading on this area, you see how market did what? Traded higher to remove this high as the next buy stop to target. You see, you are getting a flow of your pair, how it is moving, how your pair is doing what, how your pair is moving. So what do we have here? The mission, the objective of smart money is to trade back within this range. So as a trader, you must have an idea of all these imbalances resting here, because market is trying to fear those imbalances resting here. You can even go to M1 time frame to find other imbalances resting here. Then we want to be we want to sell. We would like to sell from this range. If market is that, because remember, the whole stuff we have here is a pullback within this range. If market is trading within this area, we can start expecting a possible drop. Think of this. You have a low, you have a high, then you have a low. Think in that way, right? Then here, that's what you keep thinking, but you don't know what market is going to do for you. You keep looking at the current target, and then if market gives you a reaction here, that's going to drop, that's when you are going to do what? You are going to sell all the way down. This is why you always have to wait the weekly open to form, and then try to see the intention of smart money, because you don't move the market. You have to follow what market is doing. So when the market is here, we have seen a successful distribution, right, forming, and we are able to sell all the way down. We had the news here, so we have to sell all the way down with a kind of probability that we can take this low because we are trading within this area. But as you can see, market again reacted to what? React to this other block resting here, and then start trading higher. We are crossing our trade somewhere here because we have seen a reaction. Market is referring to create a low, right? So if market gives us opportunity, two things can happen. If market has chosen to use this level to fall down, we may consider this area as a little BOS to confirm a downtrend. We will confirm that when market again fails to break this high. If it fails to break this high, that will be a confirmation that market is likely to trade lower. Right? So this is it. This is how you have to keep dealing with what? You have to keep dealing with what? With your ranges, right? Even if market is here, we want to see how the weekly candle next week is going to behave, because the market can easily trade back all the way down here. The way we are expecting deep pullbacks here, it should be the same way you are going to expect a kind of deep pullback within this bigger range. This bigger range. Like this. You are going to expect that market can easily push all the way down here. Look at this consolidation you have here. Try to compare this consolidation and this consolidation you have here. Same thing. Right? Market can easily do what? Can it drop? The same here. Market can drop to trade within this primary zone and then it push higher. Hope you understand. But if you break this high, we will keep thinking that this time we have got a bullish range, but we want to keep monitoring the behavior within that range, because market can go anywhere. Market can even go down to break this low. Maybe based on our time frame. We have taken our zone here. On our time frame, this area was taken as the target, so market can easily create a deep pullback on our time frame. So what you have to do is to keep monitoring the move, right? Hope you get an idea of what I'm talking about. So if you go to GBPUSD, on the GBPUSD, GBPUSD, you have on a daily time frame. What do you have on a daily time frame? In the daily time frame, we have this break. The high was taken here. This high was taken. This high was taken because this is the high. This is the low. We have inducement below right here. Liquidity taken, and then have another break of structure. Then we have what? We have this structure forming a high, a low, a high, a low, a high, a low. So our current range is here. We are interested in this retracement range. This retracement range we have here. So that was a break. So our range starts from this low all the way to this high. This is our range. Then everything else we see is what? Everything else we see is a pullback. Everything else we see is what? Is a pullback. This is retracement break. So our range starts from the bottom here to the top. Everything else we see is a pullback. So we need to keep monitoring this move and try to see how market is going to take the high. If it fails to take the high, it will go down, take the low. One of those two things must happen. Market will either take this low or take this high. You have to understand that. Then we need to monitor this structure we have here to see how market is going to behave. If you go to H4 time frame, on H4 time frame, as we had this successful drop to the downside, we have what? We have a break of structure right here. We have a break of structure right here. We have imbalances resting here. This is our imbalance. We need to see market trading here to remove this imbalance, but we are not done yet. We cannot confirm that GBPUSD will not come back here, right? So higher time frame, ranges you have here will dictate us, right? So if you look closely here, so within this move to downside, we still have what? We still have kind of imbalances resting here. You see these candles? You have imbalances between them. This low, this high and this low, you see you have a small imbalance. This matters a lot. This matters a lot. Market can easily come back to trade within this balance before a takeoff. So this is what? This candle is our bullish order block, right? So the same strategy. How do we confirm that the market is going to come back here? First of all, we must see what? We must see a break of structure. We must see a break of structure. For example, look at here. You've got a break of structure. You are waiting for market what? You are waiting for market to come back to trade on this level so that you can short the market all the way down here. But you see what happened. Market broke the high. They say you've taken a losing trade here. This is why I talk about the risk management, folks. And this is why I talk about the stop loss. You can take a losing trade here, right? And then the market, after taking this losing trade, look at what we call kind of beautiful manipulation. Market takes the low and takes the high. This time we keep thinking, okay, we have got a bullish move. Market is going to feel what? It's going to feel this imbalance here. After feeling this imbalance, this is our bullish order block. We want to buy on this area. So this was opportunity to buy and target this high as the target. Market is not reaching your zone. This is why every time you break a short time high, you better take something off. If you buy here, market breaks the first high, you can take something. Yeah, this is what we call trading. Then market goes down again and then broke the low. You see? Your range must be changing a lot. So this time, what I see here, I see it as a pullback within this range. Where is the range? This bearish range. From here, all the way down here, I still see this as what? as a pullback. A market can easily take this short time high and then trade back on our main zone here before market does what? Before market pushes higher. But before market reaches this area, how will it create a move? You've seen you have got another retracement break or structure here. So with this, market can easily trade back within this area before it goes here. This is what we call order flow. You have to understand. But this is what we call order flow. So market can do what? Market can easily create a pullback. Remember, every break basically deserves a pullback, right? Market can easily trade on this area and then it goes out, take this high or use this as internal structure to continue a move to the downside. So you have to know on this area, on M5, you've got what? You've got something market is supposed to be looking for. This area. So you've got what? A liquidity run on this level. Liquidity run on this area. So if market trade on this level, I can be looking for opportunity to do what? To buy if I see a reaction. If I see a reaction based on trading sessions, maybe a London displacement or New York displacement, then I can do what? I can be a buyer on this level, targeting what? Targeting, for example, this high or this short time high you have here as my liquidity, this area. As my liquidity, this high. If market buys here, you can target this high first of all and then wait for a reaction to see if it's going to take the high and respect this major liquidity we have here before a downfall on this area. So this is how we approach what? This is how we approach ranges. So if market is here and it successfully creates a buy movement, then you can do what? You can start thinking how you're going to target this high. If market trade back on this level right here and it shows you a strong move to the upside, yeah, you can expect now market is no longer interested to come back here. You are going to target this high. Then market can use this level in the future as a sponsored candle in the future. For example, if it is going to buy. The same way, market left all of this zone and trade all the way higher. It has left it for future use. This is why it is coming back to trade within that zone. So this is it for EURUSD. I hope this video is leaving you with kind of information how to approach a structure. And I'm going to talk about EURJPY and the NZD card in the next video that is coming very soon. So stay ready, guys. Stay ready for the next upload today. So keep subscribing, keep sharing the videos, keep liking, keep following us on our Telegram channel so that you keep seeing how we are trading and get inspired, guys. Okay, see you soon.